Joining me to bring the market week to a close now is Chukwu, a licensed dealer and the group CEO at Carry Asset Management. Good evening to you, Johnson. Thanks very much for coming on the show tonight, sir.
Good evening, Bosun, and thank you for having me.
It's good to have you to wrap up the market week, the first in the month of May. What do you make of the first quarter earnings of big industrial and consumer goods companies that were negatively impacted by the state of the economy and politics?
Well, if you look at their top line, which should actually be the starting point, you realize that many of them did not really grow their top line significantly. We are seeing growth of about 8% or thereabouts. The likes of Dangote Sugar. We also saw some marginal growth in Bua Food. And even if you look at Unilever, so most of them really did not grow their top line so much. But interestingly, a number of them were able to grow their bottom line faster than they grew their top line, which meant that they were able to pass on increased costs. They were able to get, due to high rate of inflation, they were able to reprice their final output at rates higher than the rate with their cost of goods increased. So while we saw an improvement in bottom line, we saw a marginal increase in top line. And this will also show you that Nigerians are finding it difficult to buy basic goods or consumer goods. Because if you're not seeing growth in top line, it then means that that sector or industry is also challenged. Because if you do not grow your top line, ultimately cost will catch up and it will affect the bottom line.
Interesting numbers. We're sticking with the manufacturers. The Manufacturers Association of Nigeria says the output was down 28% in the second half of last year, and then we came all the way into the elections in February. Do you think there is more pain for listed companies manufacturing in the ongoing fiscal year 2023?
Yeah, interestingly, Bosun, the factor that actually led to a decline of about 28% in output for the manufacturing sector are still there with us. One of which is high energy costs. We saw, as a result of the Russia-Ukraine war, we saw diesel prices go up close to 1,000 naira per liter. Then we also saw instances, we've seen increase in interest rates prior to the beginning of the second half of last year. Remember that MPR was just 11.5%. By December, it was already 17.5%. And what has happened is that ultimately, like I've always said, that the banks were able to pass on additional costs of funds to the manufacturing sector, particularly those who do not have strong bargaining power, which the Nigerian manufacturing sector do not have. Then they had to deal with the issue of what they call chronic shortage of foreign exchange, which is still with us today. We've not seen any improvement in foreign exchange supply. So if these factors remain with us, you have weak consumer demand, which we have touched on earlier. You have high cost of energy supply, or stable supply from the national grid, where most of them are relying on their own self-generated power. And then you also have to deal with scarcity of FX to import basic raw material and basic machinery. Then high interest rates. Then you are going to be dealing with this problem going forward. So it's not likely the manufacturing sector may see a kind of a respite in the next, in the first half of this year. And added to that, if you also remember that the last half of last year, the central bank had introduced the cashless Naira design, which affected demand for goods and services. That you will still see manifest in the first half of this year, because that also dragged on up to the month of April. So the manufacturing sector's challenges are still there. Power supply is still a problem. FX supply is a problem. High interest rate has worsened. And until we address those issues, the manufacturing sector will still be contending with those challenges they faced in the second half of last year.
I'm sure, as a licensed dealer and the CEO of a firm in the market, I'm sure you're looking at those numbers. But very quickly, let's touch on something very big this week. The Securities and Exchange Commission approved digital securities trading for NASD OTC Securities Exchange. How significant was this development for the market?
Well, as it stands today, everybody is going digital, and we have seen a lot of digital currencies traded in Nigeria, being traded informally in Nigeria, on the Nigerian economy, within the Nigerian economy. So what this approval will mean is that NASD will now formally set up a platform for the trading of digital currencies or digital assets in the country. And that platform will also allow for issuance of digital assets in the country, settlement of digital asset trades in this country, and ultimately we're going to see some level of efficiency and improvement in costs for both for market operators, investors alike, because with the tradition of the entire platform and the trading of digital currencies, you will actually see lower cost of transactions, and in effect, you are going to see a lot more people participate in the market for these instruments.
Okay, so the stock, the Nigerian exchange, on Tuesday fully reopened its physical trading floor. Are you heading back to the trading floor with your maroon jacket anytime soon, Johnson?
Well, we will, but it's not going to be like before. It's going to be a point for networking, a point for sharing ideas, a point for touching base with our colleagues. Remember that, like I just said, digital currency, digitalization has actually made it more convenient for people to actually operate from anywhere. We've had our market closed for almost 2 years, and activities we are still going effectively. Volumes we are still as high as they were, if not higher, and transactions were being concluded virtually. So I think a lot of people would, even before the market, the floor was closed, most brokers were coming to the floor maybe once a week. I mean, at intervals, no longer regular, but once in a while you come to the floor to network with your colleagues, to share ideas and know what's going on. But we are not going to have the market floor that used to be full with all brokers struggling to have their own trading booth. That has become a thing of the past because of advancement in technology.
We'd like to see you on the floor, by the way. We enjoy your company. But again, let's talk about catalysts for the markets that you're looking forward to in the second half of the year. We're going to have a new administration on the 1st of June, so we're just counting down the final days to that. How would that shape the return for this year for investors when you look at what catalysts would there be? Would there be the second quarter? Would that be the inauguration of the new administration? What would that be for the second half, which will be starting 1st of July?
The major factor will be the takeoff of a new administration. One is how the issues around the election are resolved, so that Nigerians will have restored confidence in the polity and in the economy. And that will also bring back confidence, not just to local investors, but also foreign investors. We've seen a lot of investors staying on the sideline to watch their political evolution or development. Once that is resolved, so one of the critical factors is how the political logjam is resolved. The second factor will be the pronouncements or the policy pronouncements of the new government. And then the third factor will be the quality of recruits or members of the executive committee or executive council of the new government. These are the three factors that will kind of signpost which what the economic outlook should be or will be, and that's what we kind of try to bring back confidence of local and foreign investors who are still on the sideline.
All right, Johnson Chukwu, licensed dealer and group CEO at Carry Asset Management. Thank you for squeaking to our Market Week on Broad Street. Have a great weekend.